I think my context is that the global economy and the global world system, the entire status quo, is entering a new era, which I call an era of scarcity, which is different categorically from the era that we've had for 75 years of abundance. And the abundance has not just been in that there's plenty of resources, it's also been affordable, like it's been low cost. And so as costs rise for a variety of reasons, and scarcity impacts the global economy, then the sort of model of growth at any cost is broken. It's not going to work anymore.
Welcome to Wealthion. I'm Wealthion founder Adam Taggart. As the old saying goes, it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. It's easy for investors to fall into the traps laid by their belief systems. Whether to the bullish or bearish side, we all have our own biases that can warp the way we perceive reality. Which is why forcing ourselves to take a systemic view of the economy, markets, and society can be so helpful. By understanding the way that our systems work and projecting current developments through to their most logical outcomes, we can sidestep most of our biases as we develop our predictions and conclusions. Today's guest expert, author and macro observer Charles Hugh Smith, has made a career of this kind of systemic thinking. We'll talk with him about where today's really big trends are taking us. What kind of economy and standard of living should we expect in the unfolding future? Charles, thanks so much for joining us today, especially so early there, your time in Hawaii.
Well, thank you, Adam. It's my pleasure to be on Wealthion.
Well, it's about time. So, Charles, you and I have been friends for a long, long time. I was doing the math. I think it's like over 12 or 13 years now. And it's great to finally have you on Wealthion here. I got a lot of questions for you about your current writings. But before we do, let me just do the favor of asking you the same question I ask everybody when they first come on the channel. What's your current assessment of the global economy and financial markets?
Well, that's a great question. And I think my context is that the global economy and the global world system, the entire status quo, is entering a new era, which I call an era of scarcity, which is different categorically from the era that we've had for 75 years of abundance. And the abundance has not just been in that there's plenty of resources, it's also been affordable, like it's been low cost. And so as costs rise for a variety of reasons, and scarcity impacts the global economy, then the sort of model of growth at any cost is broken. It's not going to work anymore. And so we're in this vast, complex transition of eras. And of course, that's very confusing and complex because people who are benefiting from the current system are going to fight to keep it as it is, right? And then the forces of adaptation and evolution are trying to sort out what's the best way forward. And so on top of all this, I'm also seeing that the metrics we use are basically like a horse-drawn carriage from 1890. GDP, corporate profits, how we measure growth and prosperity, they're really so outdated that they're not really helping us. And so we need to develop an entirely new set of metrics to help guide us. So I'd say we're in for a period of turmoil, which is not all bad. In other words, when you're going to make a huge transition, whether it's a household or an enterprise or a nation or the global economy, you're going to go through a lot of ups and downs as this gets sorted out. And there'll be winners and losers, and that's really what we're talking about today.
Okay, yeah, and of course, the intent of this channel and this whole video here is to try to give people enough insight so that we're increasing their odds of being on the winner side of that transition. All right, Charles, so we got a tall order here because we're going to be trying to pack the messages of several books you've written into a single interview here. I'm gonna do my best. We might need to bring you back on to get to whatever we can't get into in this discussion here. But One of the things that your recent writings have really focused on is the difference between kind of navigating by ideology versus navigating by a systemic approach. And maybe that's the fat pitch that I can just toss you here at the beginning and let you sort of explain the differences of the two, and why consciously making the choice to focus on one versus the other is probably going to be a huge determinant of your destiny in this transition.
Yeah, that's a great topic. And of course, we're all prone to having our own sort of, if not biases, then preferences that fit our value system and experience. And so the thing about ideologies is they're kind of quick and dirty, right? You kind of buy into the idea that if this is ideal were only reached, everything would be great, So we see that in socialism, capitalism, Bitcoin, everybody's, if only it was implemented correctly, everything would be fantastic. But the real world is actually maps much more closely a system. In other words, there's inputs, and then there's processes that go on that work on those inputs, and then you get an output. And so that to me makes a lot more sense in terms of trying to be predictive in a useful fashion, right? Either you change the inputs, or you change the processes, or you change both of them, or you're going to get the same output. So, and it also helps us break down all the different complexities that we deal with and try to group them into categories that we can understand. We can't understand, hundreds of millions of inputs, but we can if we break them down into a systemic kind of understanding, then we can kind of start making sense of things that are actually very complicated. And so that's why I kind of favor systems. And of course, it means that sometimes I'm a libertarian. I mean, I'm accused of being a communist. I'm a libertarian. I'm a conservative too, because I see elements of value in each of these ideologies, but it's better to kind of understand them as inputs in a system.
Okay, and you've written here that all socioeconomic systems evolved as problem-solving structures. So there's a reason that they were created, right? We relied on these things to, provide the basics for living, right? I mean, food, safety, governance, all that type of stuff. So they all have a role. It seems like, and I don't want to put words in your mouth, but it seems like if these systems don't evolve, you end up having what you sort of alluded to in your first answer, which is you sort of start playing by this antiquated playbook. And the rule book you're using isn't appropriate for your present, which then isn't creating the foundation for the future that you want here. And it seems to me that a lot of the problems that we have is when the system sort of gets set in a certain way, and then, as you said, sort of everyone that benefits from it is trying desperately to maintain the status quo and keep it from changing. And usually, the more that conflict builds, it's enriching those that are controlling the status quo, and it's diminishing the prospects of those that aren't. And there's a number of different systems that we can and probably will talk about in this discussion. But if you just come to mind are like, the way that our capitalist system works these days is it's dominated now by a lot of kind of corporate cartels, right? So the pure capitalism that creates sort of freedom and fairness and equality of opportunity is really getting suffocated here from that. And then we see that get reflected. And also we can talk about the financial system as well, and some of the things where that's captured by the dominant interests, where the playing field is so slanted to the big money, and the individual investor gets the raw end of the stick. So I could probably go on in many different other examples, but can you talk about kind of this sense of like these things evolved for a good purpose, they just sort of got bastardized as time went on. Do we need to throw everything out, or do we need to just sort of break everything down into its fundamental components and reassemble it for the type of future we want?
Well, that's a great topic, Adam. And I think my basic perspective is that when you centralize power, which goes along with centralizing wealth, then those at the top tend to naturally want to maintain the system and in the stasis, the fixed kind of the way it is now works for us. So let's keep it this way. And you can see that in like imperial China, the rise and fall of various dynasties. In other words, from a very long point of view, we see this in city states going back, 3,000-4,000 years, and nation states and empires. They all kind of fall into this trap of when they centralize power too aggressively, and there's no longer competition, competition both economically, politically, socially, then you basically suppressed natural selection, right? The society and the economy no longer have the means to adapt and evolve as conditions change. And so I'll give you a real world example today, I think, which is Michael Pettis, who's an expert on China and based in China, has done a good job explaining to the rest of us. We get trapped in these legacy systems, which in China's case was the model of development that they chose was very heavily dependent on real estate, right? Building a lot of apartments. And of course, they needed housing. They were an underdeveloped country. And so all this made terrific sense in the 1980s and 90s. But it actually ended up being tied into these legacy systems, like the local governments are largely funded by selling the rights to development. And so they're trapped now in this system because there's so many legacy players who are politically, very powerful, who are saying, this is the model that works for us, let's keep it. But it's like, there's something like between 30 and 50 million empty flats in China that are just, sort of like holders for excess capital. And so that's not necessarily healthy for the Chinese economy.
And just depreciating along the way.
Yeah. And so that model, it's a good example of how even, the smartest people in the room and the most effective, terrific models, they eventually become intermarginal returns. They stop working, but those people that are benefiting from them don't want them to stop working. So they try a lot of gimmicks and tricks, which puts the system at risk of, it just increases the chance of systemic decay and collapse instead of just dealing with that one sector. And so kind of the short answer, I think, here is if you allow centralized power to become too dominant, then you get this kind of stasis. And what you want is competing sectors, elements, political parties, et cetera, because that churn is how you adapt.
Okay, so we have, at least right now, maybe some of this sclerosis of resistance to change, and we're now transitioning into this, what you called earlier, a vast and complex era of transition, right? That's going to be largely defined by scarcity, right? That resources are no longer going to be as abundant or low cost as we were able to enjoy, or at least we in the West will say have been able to enjoy over the past century, basically, right? Maybe more. I guess let's talk about the drivers of that scarcity. So why do you like, what's the argument for why you believe we're going to be in this period of scarcity? And then let's talk about what kind of adaptation do we need, if we're going to move away from the sclerosis to something that's going to adapt to this unfolding future. What are the specific types of movements you think we need to do that well?
Okay, those are great questions. And so I'll try to take the first one. And so the era of scarcity is driven, I think, by one pattern, which we can go back and look at history, and many historians have done this, Peter Turchin, for example, that humans over the course of civilization tend to increase their consumption, increase their population up to the level of their resources that they have. So things are terrific when you discover a new resource, right? And then it's a era of prosperity, everything's abundant and cheap and everything's fantastic. And then the population and consumption rises up and starts soaking up that. And then if there's any sort of diminishment of those resources for climate change, which is a common element, the little ice age in the 1600s was one of the factors that created like 30 years of war in Europe, right? And so we see that these changes occur, and it's on an almost a cyclical basis, right? And so there's that element of human history. Then there's the other part of we've become so good at consuming vast resources that we're depleting the cheap, easy stuff. Doesn't mean it's gone, but it just means that it's going to be more expensive to go into places that don't have any roads, that are far from harbors, for example, and you're going to have to build an entire infrastructure to get to that mountain, to tear it down, to get to lithium, and you need tons of fresh water, and so on and so forth. There's all the easy stuff's been done, and so there's that, and then there's geopolitical tension, which is also a historical pattern. Now that resources are scarce, or perceived to be scarce, or more expensive, then now there's going to be geopolitical conflict over who gets to control those resources. So I think those are the elements of scarcity that are in play.
Sorry to interrupt, but I just want to put a visual up here to help drive it home for folks. Because Charles, as you know, I used to talk a lot about this topic in my previous life before Wealthion. I'll see if I can find it here, but if I can, here's a photo taken in the Klondike, I think, back in the 1800s. And these two guys are leaning up against this boulder here. That boulder is a copper nugget. It is like a Volkswagen-sized copper nugget that these guys are leaning against. We don't see those anymore. And we don't, because that was the easy stuff that was just lying around, these massive, big, copper deposits. Now we are going after, weaker and weaker grades, more and more dilute grades of copper in the world. And I'm going to try to find a photo to juxtapose here with that nugget, with the Bingham Canyon mine in Utah, which I've been to actually, which used to be a mountain, and now it's an inverse mountain. It's this massive gaping hole in the ground, and you go there, and there's just unbelievable activity with these massive trucks that are like, they're like, I don't know, 15 feet tall, if not bigger than that. I mean, the tires themselves are like 8 or 9 feet tall, that are pulling all this ore out of the ground, and it's rock that has to then be pulverized, and the trace amounts of copper they find in there is basically what we're going after now, because that's what's left, right? So I find visually that can really be a good jeller in people's mind of like what you talk about when you're like, the easy stuff's gone. Yeah, we used to stick a shallow straw in the ground in Texas and get a gusher, right? And now we have to go out, into the deep sea and go look for oil that's miles under the bottom of the ocean, and we don't do that because it's fun. We do it because that's where the stuff that's left is now, right? And I think if you remember the Deepwater Horizon, I remember reading that had like more computing power and technological complexity than the space shuttle had, right? And again, we don't do that because we just like a challenge. We do that because that's where the material deposits are left. It's harder to get to, it's more expensive to extract, and all that stuff rolls up into higher cost for what we're pulling out of the ground, and in many cases just scarcity, because it's just harder to find and obtain.
Absolutely. The visuals will be really helpful in that regard. The other elements are that, the growth at any cost kind of economy that we have, that we've developed kind of by legacy abundance. I call it the waste is growth landfill economy, because we don't really differentiate between wasting resources. That's growth too, and as people like to say, when something burns down, it's good for GDP, right? And 1 million cars sitting in a traffic jam going nowhere, that's burning more fuel. That's a growth element too. So we need to differentiate between investing resources and getting more out of them. In other words, instead of just waste is growth. And then that's, of course, part of the planned obsolescence. How do you make more money? Well, you force your consumers to buy a new product every 2 years. And then that ends up in the landfill. Like, we don't really recycle much of our industrial waste. We like to think we do, but the reality is we don't. So that model's really not going to work anymore in an era of scarcity. The two drivers of the last, say, 40 years of growth by any means has been financialization and globalization, right? And this is why we've kept costs down, is financialization has lowered the cost of money, of credit, and it greatly expanded the amount of credit that was available to go out and buy stuff. Then globalization sought out places with cheap labor and very few environmental standards, and places where the currency is beggar thy neighbor, always being depreciated. So we moved production to those places, and so the cost of production fell. So, but both of those trends are now sort of running out of rope. They've reached marginal returns. They're not yielding the results, and hence, guess what? We have inflation for the first time since basically the 1970s. So this is another one of those things of those legacy systems are no longer working. So what do we do now? And my approach is to look at like the three big elements of any economy, whether it be national or global, there's the market, right? The marketplace of transactions and production and consumption. And then there's the government. And then there's the social structure, which includes like the moral order, the sort of agreed upon moral foundations of that society, and the social contract. Like, what do I need to do to get ahead? How do I improve myself and my household? So each of those can kind of tug at the other ones and pull it forward or be pulled forward. And so we are used to seeing technological change, rapid technological change that pulls the government and society forward almost effortlessly. But we've sort of less attuned to the way that society has to change as well. And it goes through these tumultuous periods where what was acceptable in the past becomes unacceptable. And so a new sort of social demand is placed on the market and on the government. And the last time that we went through this was really the 1960s, where we saw the rise of these huge social changes. What was acceptable in the past, such as racial bias or unequal rights for women, these things were no longer acceptable. And same with the environmental movement and so on. So that, I think, is what a lot of people don't really anticipate. We all understand how technology changes, right? The printing press in the 1500s, and railroads in the 1870s, and so on. And so it's harder to anticipate social change because it's harder to predict. Like, it's not the result of technology. It's enabled by technology, but it's not something we can easily trace. It just sort of pressure builds up that the system isn't working, and then we have to come up with new solutions that are acceptable to the broad population, not just to the elite.
All right. Well, this is what I find really interesting about your work, Charles, which is, we have these three elements, or what I would call, what's a good way to describe them? I don't know, sort of mechanisms for how we run life, right? The market, government, and society. And I'm going to go back to what you said earlier, which is that these are they all evolved as problem-solving mechanisms, right? And it's like, once they don't have a problem to solve anymore, then they get into trouble, right? They become self-serving, right? And we get that inequity and the sclerosis where folks are trying to protect their fiefdoms and all that stuff, right? But what kind of gives me hope is when you talk about these great challenges, I think the average person can say, wow, that just sounds really overwhelming. Like, what hope do we have? Do we just throw up our hands in despair here? And I think your answer, and correct me if I'm wrong, is no, we have the tools to actually engineer the type of future we want. We're just not using them well. And we need to get back to using them, for us versus against us. And in many cases, it's just giving these mechanisms the right problems to go solve, right? And if I can just opine on each one real quickly and then let you run, maybe I'll go through them in reverse order. What society's job is to do is to tell the government, these are our values. These are important. Essentially, these are the problems we want addressed, right? So you talked about the 60s, right? Hey, racial bias is bad, right? We want a more equal society. That also extends to gender. We want you to fix that too, right? And so we had the civil rights movement, we had the women's movement. We made a lot of progress in a short period of time. The government's job is to, essentially sort of set the rules of the game and then be the referee to make sure that the game is being played out the way it wants it to and is fair, and everybody's clear on where the boundary lines are and whatnot. But other than that, maybe this is my bias, it's kind of to get out of the way, right? But it's to set the parameters. And then the market's job is to go and play the game in the parameters that the government has set. And of course, when the government gets involved in the game, that's when you get, government interference and intrusion. And that's where you get I just tweeted this out the other day, Bill Maher's rant of the $1.7 million toilet in San Francisco. Maybe we can talk about that for a second, but you just get, bloat and inefficiency and unfairness and cronyism and all that stuff, right? And same thing with the market. If the market is left to itself, you end up having, the tragedy of the commons, right? Where the market doesn't value these communal assets that are so essential, where the market can get concentrated, where you begin to have, monopolistic and trust issues and whatnot as well, right? So you need the government there to be the ref, right? And again, to tell the market what it can and can't do. But once it's done that, the market can be left unfettered within those boundaries to innovate and to do the problem solving for us in terms of developing the technologies and the solutions that are going to carry us carry us forward. So my point here is, like, we have these three mechanisms, these three structures that are incredibly powerful tools. We just need to use them the right way. And right now, it doesn't seem like we're using them well at all in any of those three areas. So that's my opining. Now I'll let you run.
No, I think that's a very good summary of the situation. And so, the government, we almost forget that it has a proper role because it's decayed to the point where we sort of forget that there is a useful role for government as a problem-solving structure. Let's go back
as opposed to a problem-creating structure.
Yeah, which is what it is now, right? And we all have endless examples of that. So let's go back to the 1970s, which I've done recently in a variety of blog posts, because that decade is, known for stagflation, right? Various, reasons behind it. And it was it's generally dismissed as like, oh, that was a lost decade. That was terrible. It was like high inflation, low growth, stagflation. It was a terrible decade. And it's all like, well, wait a minute, let's take a look at that. Because actually that was an example of the kind of transition that we're entering now, in my view. And I'll explain real quickly. Society decided that rivers that caught on fire and rivers that were filled with dead carcasses was not a good thing. And the air, was the equivalent of smoking 2 packs of cigarettes a day and that kind of stuff. In other words, industry had basically used the nation's environment as a dumping ground, right?
Right. We had the crying Indian. Remember that commercial?
Exactly. And so, and this was how the market functioned, because this increased profits, right? You externalize your costs and then you privatize your profits, right? So society changed, and then the government came in. Even though it was a conservative president, President Nixon oversaw the implementation with a divided Congress. Everybody got together and they put in the EPA. Now, industry didn't like this at first, of course, because it was totally upsetting and it was going to drive their costs much higher. And it did. And in fact, the United States, both private and public sectors, had to invest, in today's money, trillions of dollars in the 70s. That's why there was stagflation, because we had to invest so much money in cleaning up the environment and rebuilding and re-engineering our industrial base to become much more efficient and less polluting. And yet look at the payoff. It's like, was fantastic, because we then made our whole industrial base much more competitive, and we cleaned up the environment, which helped public health, and we created new economic opportunities. Instead of, who wants to build a condo on a river that stinks and it catches fire? No one. Now the rivers are clean. People are developing properties. There's, I posted a photo of a kayak regatta, that it used to just be a river that was so polluted, you wouldn't want to get close to it. So there's a lot of economic benefits that came out of the 70s. It just took a decade of investment. And then we've reaped the benefits for decades since. So I think that's what kind of a model we need to look at, that everybody's going to complain about the fact there's, growth is low. Well, growth is low because we're investing in the long term. And so the winners will be the people that look at this and go, hey, we need to redo the industrial basis of the country, just like we did in the 70s, right? And it's going to pay off in the future, but we're going to have to invest in the long term, not like for next quarter.
Okay, let me just clarify a little bit. So the reason why you're saying we need to basically overhaul the economy is because we're entering this era of greater scarcity, so that like productivity and efficiency are going to be much more important going forward, right? You're nodding as I'm saying this, and I imagine globally, you're saying, look, the countries that get this early and rejigger their economies to thrive in this higher input cost world, they're going to reap a lot of advantage, right? Okay, you're nodding as I'm saying all this, right? Okay, so then what we need to do as a society is we need to make this priority clear, right, to government and say, look, this is what we want, this is what we value, right? We don't want this stagnating pursue growth at all costs model that is basically breaking down in front of us. We want this more efficient, nimble, however you want to describe it, a model to exist. And so, we're going to put you in there and want you to create programs and regulation, et cetera, that foster this. But then we as a society, we have to be adults about this and say, look, this transition is going to require a period of investment that is going to hurt to a certain extent, right? We're going to have higher costs. We're going to maybe have slower growth in the short term, whatever. But we're investing for the longer haul, right? We're being adults. We're delaying gratification today to have more bounty tomorrow, right? And so this sort of requires a bit of an overhaul of our society, right? Which is all about like, I don't want to take any pain. I want instant gratification. I always want someone to come in and rescue me if I feel bad, right? We're not, I think it's fair to say we're not the greatest generation, that built most of the infrastructure in this country. And so we're going to need, to kind of put on our big boy pants and, return to a level of maturity where we say, hey, look, we've got to start taking a longer view. And we've got to, if we want a better tomorrow, we got to invest for it today. So just like you said, the stagflation of the 70s, which you're right, we all remember that as like, oh, what a terrible time. And look, there were lots of parts about that time that are regrettable. You're right, though, Charles. We can look at that from a different point of view and say, hey, we were actually prepaying the price for what we were going to unleash in terms of economic activity after that. And with that type of lens, it's like, hey, that was actually we had a lot of great decisions. We not only improved our economic base, but we improved our social equality and our environment all at the same time, right? So did I capture all that right there?
Absolutely. And I think you especially were good at pointing out that the government's role isn't to be the savior state, as you say, in my term. It's to set the goals that society values. In other words, solve this problem. And so I would say the problem that we need to solve is how do we, what kind of economy can we have that's not dependent on financialization and globalization? What kind of economy serves our national interests? And I think it's obvious that radically improving efficiency and productivity is the answer. And, there's a lot of examples of this. I'll give you one quick thing that always bugs me, which is to see the huge waste of food in the United States, right? Just vast quantities, up to 40% throughout the whole supply chain. Well, South Korea, as an example, they had the same problem like everybody does, right? You waste what's abundant, what's cheap, right? So, but they instituted kind of a national policy of trying to reduce food waste, and they've almost, they've made huge gains in reducing food waste, which seems so basic, right? And we can't even do that. So we have a lot of opportunities, you know, and if you look at the efficiency of the efficiency gains in the 70s that were like just huge. They were monumental gains in appliances and factories and just on and on and on. And so it's like, well, what if we set a goal of we're going to reduce consumption of essential materials by 50% and yet still have the same output? Well, that's what the market is good at solving. Once you set that goal. Yeah. And it's doable. I just read an article in Scientific American about how the cement, you know, the process of making cement is very energy intensive. And if you approach it engineering wise, incrementally, yeah, we could like cut 30% off that if that was a goal. And the market would, if the market was going to reward those people who pulled that off.
Yeah, I have a friend who spent his career working in the heating and cooling business for buildings, and he's always railing and he's like, look, if you're going to build a car, you start as one of the specs for the car, what its miles per gallon is going to be, what its fuel efficiency is going to be, and everybody involved in the car has that as a goal in mind, right? So the folks designing the engine are creating an engine that's going to have that efficiency. The designer of the car is creating the aerodynamics to make sure that the car's, you know, got the least amount of drag so it can hit that goal. Everybody's working towards that goal. He said with a building, we don't have that generally. Like when a building's being built, it doesn't have like an efficiency number that everybody from the architect to the contractor to the guys hammering the nails are all aware of, right? So you basically get this building that's just as energy efficient as it kind of is the sum of its components, but they all just sort of, you know, it's whatever it is after everything's been slapped together. Where if we decided building efficiency was important, building energy efficiency was important, and we had a national standard and everybody built to that and designed to that, we could save, you know, an unbelievable amount of energy that just escapes as waste heat right now. You're nodding as I'm saying this, but that's just one, again, small example of something we could do, but we don't. And one of the best lessons I learned early in my career was, I remember I was just graduating high school basically, and or not high school, college, and was going to work for a company where I was going to have to interact with some engineers, and I didn't know anything about engineering at that point in time. And my girlfriend's father had been a very successful executive, and I sort of shared this concern with him. It's like, I don't know anything about engineering. And he said, you really don't need to in your role. He said, what you need to do is you just need to know what questions to ask these guys. He's like, if you give them the right problem to solve, they and their expertise will go solve it. So your job isn't trying to understand engineering from soup to nuts to guide the engineers. Your job is to understand what key problems need to be solved that engineering talent can address, right? And I feel like that's pretty much the relationship here between society and government. Is society just needs to get its act together and be really crisp and mindful about what it's asking government to solve, right? We don't have to come up with the solutions ourselves. Once the government sets the parameters, the market will figure all that out. We just need to get really specific about what's important to us. So just like you gave with Korea, right? They were wasting a ton of food until society said, you know what, we're bumping this up to the top of the list. You know, so government, we want you to figure out or set the stage for this food waste problem to go away. And lo and behold, it did, because they aligned all those three mechanisms together, right? So you're nodding as I'm saying this, but I think this is really both the power of what you're talking about, but also, again, for we as individuals, everybody watching this video, the key takeaway from here is, okay, great. How do I help do my part in making sure that society is driving the right messages to the folks in government to then drive the right outputs we want from the market?
Very well said. That if all we have is a fragmented society where there's a million voices that can't find anything to agree on, then you're going to have difficulty getting there. But
absolutely. And I think what made the 60s so successful in driving change is that we had these movements that were really easy for people to buy into, right? Hey, we think that racial equality is good and what we should aspire to. And most people hearing it just distilled like that, yeah, I can't argue with that. That sounds great. I'm in, right? I think women are equal to men in terms of rights, and so we should just make that the law of the land. Most rational people hearing that would say, absolutely. When's the march? I'll be there, right? Like, these are just obvious, crystallized, movement, whatever you want to call it, but a movement to understand that people can say, okay, great, I got it. You don't have to spend the next hour telling me why I should join this thing. It's just self-evident when I hear it put that way, right? So how would you describe or encapsulate the movement for the changes that you think we need now? Like, what would you call it? What would the banner say?
Yeah, and that's a tough one, Adam, because the sexy stuff is like rockets and electric vehicles, and that stuff is not necessarily, that can be part of the solution, but it's like, how do you talk about scarcity and make everybody feel warm and fuzzy, And so I think it's like we have I guess I would phrase it like this: we have a tremendous once in a lifetime opportunity to re-engineer American society and the economy and governance to become better, more efficient, better at providing well-being for the entire populace. And that's how I'd say it. It's an opportunity to re-engineer the entire society and economy and our system of governance to provide more well-being while using fewer resources.
Okay,
and becoming a world leader, by leading by example.
Yeah, and I'm sorry to kind of like put you on the spot on this, but because I think what you're talking about is so important. And the question is, again, like, if I'm literally on an elevator with somebody and I tell them about this, like, what's the phrase I can put in their head that helps them visualize the outcome and say, yeah, I'm on board with that too. I'm just spitballing here, but one of the words that comes to mind is, what I hear you say about our current systems is that they're not being run sustainably, right? They all have end dates at the current status quo, right? And so to me, this is almost about sustainability is the word that keeps popping into my mind. I don't know if it's social sustainability, but it's like, look, we want to have economic models, social models, a standard of living that is going to be there, going to be there tomorrow, and hopefully going to be better tomorrow than it is today, right? So to do that, we need to have these sort of sustainable frameworks for making those things happen. We don't want an economic model that just continues to rape the environment until there's nothing left, right? We don't want to have a financial system that basically shoves all of the wealth point until there's nothing left for everybody else, right? Following here, I wonder if there's a way to use the word sustainability. I just don't know what I'd put in front of it. But like I said, racial equality, gender equality, those things are just like self-evident when you hear them. Maybe social sustainability is something like that, where people are just like, well, yeah, absolutely, I want a better tomorrow. And if you buy into that, then there are things that nest out of it, where it's like, okay, well, then we kind of have to live within our means, right? We can't financialize everything and just pull tomorrow's prosperity in today forever, because that's not sustainable, right? It begins to become this litmus test that you can measure ideas against to see whether they actually are pro or con the movement. So just curious what your thinking is on there.
I'm sold. I'm gonna borrow your phrase, social sustainability. I think that's a great 2-word description of this entire complicated topic. Social sustainability. I think you nailed it.
Oh, well, thank you. I'll file the trademark and we'll go from there.
Absolutely. Let's monetize that.
Yeah. Well, Charles, thank you for going on this massive romp with me. We've been at a much higher level than a higher meta level than we generally are in these interviews. But I think sometimes it's really, really helpful just to get up to the apex and look down on everything and take this true systemic view of it. So for folks that have been on this journey with us in this conversation and are now saying, okay, this is great that you're talking about this massive transformation of society that's probably going to take decades and a lot of, political wrangling and fighting with the status quo and whatnot. For me as an individual, how do I navigate this? How do I hopefully support the type of transition I want to see, but also when you talked about there being winners and losers in this process, how do I increase my odds of being on the winner side?
Right. That's a great question. And I think, and my general view is, in the era that we're exiting, it was very profitable just to be a passive investor, buy an index fund or buy a sector and kind of move with the hot trend of the day. If we're talking about re-engineering our economy and industrial base, it's more like, I think who's going to be profitable in the long run is the people who invest in the long run. And I think it's going to be a stock pickers decade. In other words, rather than just being a passive investor in an index fund or a sector, I think the people who are going to really make the big gains are those who do the legwork and look into companies that have some sort of asymmetric advantage in this transition period. Like, in other words, they may have the technology, they may have the management, they may have the marketing, and so that's going to require a lot more research. And of course, a stock picker's paradise is actually a good thing for every individual, because it's a level playing field. It's up to you. You can do the research and learn as much as you can, and the more you learn, the more likely it is you're going to pick some winners. And I think we can look at sectors that need to be rebuilt. Like I mentioned, cement. Talk about a boring field, right? I mean, but hey, if there's going to be gains in that field, then that's going to be a profitable field. And you can say the same thing about a lot of software and energy, and the companies that are going to be involved in rebuilding the national electrical grid. And so I would look at companies that are considered boring because they're just, we take them for granted as essentials, but
right.
I think there's a lot of growth.
Or sectors that are boring, because what I hear you saying is sometimes the today's winners might be tomorrow's winners there if they move fast enough, but there's probably going to be a lot of disruption in these industries. And of course, that makes opportunity for investors, right? If you find these disruptors early on and can ride their ascent, you can have phenomenal returns.
Yeah, and then there's a lot of sectors that have been hot and then they sell off, like 3D fabrication. Well, that's definitely a technology that's here to stay, right? And so, you can watch it and go, okay, it got hot, it got overvalued, now it's sold off, everybody thinks the sector's dead. Well, maybe there's an opportunity there. In other words, there's a sector that's growing, and it's just it's picking the right companies within that sector. So I think there's going to be a lot of opportunities for that, especially for people that decide to just buy it and forget it. Like, I own these shares, and I'm just going to set them aside and forget I own them, because it's a long-term prospect.
All right. Well, look, I know that Wealthion's financial advisors, when they watch this, our endorsed financial advisors, when they watch this, they're going to send you a nice donation on your Patreon, because you're basically creating a great commercial for having a good, active manager on your team, right? All right. So in addition to sort of the investing side of things, this sort of future of scarcity and the premium that's going to be placed on efficiency and sustainability, I'm assuming that there's also investments that'll be beneficial just in one's lifestyle around those themes. Is that accurate?
Yeah, absolutely. And one of my bywords is invest in yourself, and that's a way of saying, how can I make my own lifestyle and my own household more efficient, and use less capital resources and labor to get a lifestyle full of well-being and security. Yeah, absolutely.
And because I've known you for a long time, Charles, and I'm not trying to out all your personal behaviors here, but I know that you have really prioritized self-resilience very highly in how you construct your own life, and even to the point of growing a fair amount of your own food and all that type of stuff. And talking about self-resilience, so we've now been talking about really themes of several of your recent books. I was going to hold them up here, but I realized my wife has packed them already because we're getting ready for our move in a bit. But I don't know if you've got them there to hold up. If not, we'll put the covers up on the screen here. But we spent most of this time talking about the themes of your most recent book. And if you can, remind folks of the title of that book.
Yeah, it's Global Crisis National Renewal, a revolutionary grand strategy for the United States. And then my last book was called Self-Reliance in the 21st Century, and that discusses these themes we just touched upon.
All right, great. Well, Charles, look, this has been it's always an enjoyable discussion with you. Folks, Charles and I will pick up the phone, and before I know it, like 2 or 3 hours is gone. It's really one of my favorite delights in life is to get on the phone with Charles. You've gotten a little sneak peek into the type of stuff we talked about here and what a great thinker that Charles is. So Charles, for folks that have enjoyed this conversation, maybe this is the first time that they're getting exposure to you, where can they go to learn more about you and your work?
Yeah, please visit me at of2minds.com. That's you'll have links to my blog, sample chapters of my books, and all my archives are free. And if you want to support my work, I'm on Patreon at Charles Hugh Smith, one word, Charles Hugh Smith. So, thank you, Adam, for allowing me to indulge my interest in these big topics that are hard to get our arms around, but which have big payoffs when we do.
Well, absolutely. Thank you for carrying the standard and doing this hard work. And I think it's super important for folks. You know, a lot of folks who are watching these videos are taking a mindset of, okay, great, what am I going to take from the guest and deploy in the market today, next week, you know, next month, next quarter. We're talking about something that's much higher level over the span of years and decades. And it's very important to kind of get that context to nest your more tactical decision making within. So again, thanks so much for coming on here, Charles. Real quick, as we wrap up, I just want to note a couple of resources for folks. One, we are getting closer to Wealthion's spring conference in March. It's Saturday, March 18th. Just want to remind folks that the early bird pricing for that event is still in effect. Quick dial through of the faculty for the event: Lacey Hunt, Mark Faber, Michael Pinto, Danielle DiMartino Booth, Stephanie Pomboy, Rick Rule, Nick Jurley talking about housing, Doomberg talking about energy, Craig Wishner talking about farmland investing, Mike Maloney talking about the precious metals, Lucky Lopez talking about the auto market. We got a few other folks that are still coming on board for that event. But as you can tell, it's a great gathering of really true domain experts. It's going to be a wonderful time. To learn more about the event and register for it and lock in that early bird price, just go to wealthion.com/conference. And as I gave a nod to earlier, for all of the reasons that Charles talked about here, but specifically his point about, you know, a key to success going forward as an investor is really going to be adopting an active management investing process. Look, if you've got a great financial advisor who can do that for you, who understands all the big issues and trends that Charles and I talked about here, great, stick with them. Definitely should. But if not, or if you'd like a second opinion from one who does, consider talking to one of Wealthion's endorsed financial advisors. They'll give you a free consultation, doesn't cost you anything. They'll sit down with you, do a portfolio review, tell you what they think you should do. You can do it yourself. You can deploy it with your existing financial advisor, or if you like these guys, you can continue talking to them. To go set up one of those free consultations, just go to wealthion.com. Again, doesn't cost you anything. There's no commitment to work with them. It's just a free public service those guys offer. All right. Well, look, if you've enjoyed Charles's inaugural debut here on the Wealthion channel, would like to see him come back on the channel in the future, as well as other great minds like him, please support this channel by hitting the like button and then clicking on the red subscribe button below, as well as that little bell icon right next to it. Charles, my friend, it's just been wonderful. Thanks so much for coming on.
Thank you, Adam.
All right, everybody else, thanks so much for watching.